Hello everybody, Jackson here with the Wells Squad. Today we'll be talking about these chip stocks falling. We're looking at Nvidia, Qualcomm, Broadcom, the main chip makers in the US. Well, some news came out today and of course the stock did fall. You can see down 3.3% just in the past 5 days. You can see this going from 129 back down to 116. And we're going to look at this news here. Right here. So other chip stocks down after Biden's plan to cut some exports to Chinese companies. We could read this real quick. Nvidia and other computer chip companies were down on Monday afternoon after Biden's administration on Friday released rules aimed at blocking some chip exports to Chinese companies. The restrictions, which will apply to U.S. chip makers, are intended to limit China's ability to obtain advanced computing chips or further develop AI and supercomputer capabilities for uses that are contrary to U.S. national security and foreign policy interests. So basically what this is saying is you cannot sell a lot of your chips to China because it does say cut some exports. So you could still sell chips to China. Of course, China is a big play in the world economy as well as actually the technology sector. But now they are restricted to sell as much as they were. They're going to have to cut back a little bit, and that just hurts their business even more. So we could look, just because I made a post about this a while back, actually no, just about 2 days ago, and it's all about following the earnings, right? And we're going to look at Nvidia here, and then we'll go to Qualcomm, Broadcom, Micron. So essentially, you want to follow the earnings and see where they are going, and that basically predicts the stock and its price action. We're looking at a 54 cents earning, 54 cents a share EPS, 72, 77, 91, so it's growing nice and pretty stable here. 91, 104, 117 at the very top, you can see that. 132 made even more this quarter, and that was ended in January. 136, so you can see that went from 132 to 136, still doing good. Now at 51 cents. All right, 51 cents compared to, well, actually for the best guess, we have to look exactly 4 quarters back. So this is ending July, right? So we go right here, ending July, $1.04, 51 cents. So cut in half in a year. Estimated up here is 73 cents. So we're gonna have to see if it falls in line or not. 73 cents compared to $5.9 billion in revenue, when this quarter did 6.7, and the quarter it would be this one, 6.8. So revenue not down too much, almost $1 billion, but earnings are cut in half, and that's just following the earnings. So next we're going to look at Qualcomm, also hit by the news today. Earnings expected is $3 a share. If you look back to 96, 321, 323, 255, 192, 190, 217, 145. So this, you can see, was when it was doing really good. 255, 323, 321. So up in the lower threes, high twos, and now we're expected for a lower three. So not a bad change for earnings with Qualcomm. It's actually surprising how this stock is down from 190 down to right about 115 now, because the earnings have relatively stayed the same. And for Broadcom, let's see this. You could also see Nvidia did get some negative earnings reports. All these are positive. $10 a share in EPS, earnings per share. We're looking at 9, 8, 7, 6, 6, 6, 6, and I'll go one more. 5, So it went from 5 to 6 to 7 to 8. That's 7 to 8 to 9 to 9. And now we're at 10. And the revenue is 8.9 billion. We're looking at 8.4 here, 7.9, 7.6, 7.3. So revenue is growing, earnings are growing. Of course, the stock is up from the COVID highs, even 320 compared to 430. Earnings have been growing at a very, very nice pace. We can see pre-COVID, they're at 5. Now it's at 10. All things considered, despite the macro environment, as well as the chip environment as well, a double in EPS, double in earnings per share, should make the stock a $600 stock, right? If we're looking just at PE ratio and all that. So it is nice to see that some stocks are not hurt, and well, maybe it's time to look further into Broadcom. Maybe that's what we got to do. All right, lastly, we're looking at Micron. That was the last one quoted in that article. Past few years, we could look at. So they just had an earnings. They're announcing a huge factory for those chips in America, of course. So we're looking at 145 recently, 259, 214, 216, 242, 188, 98 cents. We'll go to before COVID. So they're making 48 cents a share. Now they're making $1.45. So $1 more per share. And the stock is less than what it was beginning in the very beginning of COVID, before anything fell, with a earnings beat every single time. So it is kind of confusing at times, because you see this stock, you see its earnings, you're like, well, what's happening? And that has to do with, of course, the constriction of the actual economy, as well as the particular niche that these stocks are in, making computer chips. So this quarter, $1.45. Next quarter, estimate of 6 cents a share. Well, of course, we have to look more into that, because that is a huge drop for no reason that we know of. But hopefully it's not to do with this news. It does say some exports. I'm not exactly thinking that all exports are going to be halted to China, because that would destroy these businesses. But some, sure, and that just cuts further restrictions on their money-making capabilities, right? It's going to hurt them a little bit. But we see a 3% drop today. Is China 3% of their market? Maybe it's more. What about half of China, right? Because it's only some. So we have to look at China look at Micron and their business to China to fully examine the situation. That's what I would do if you're further interested. But yeah, Broadcom, Micron, some solid companies with growing earnings and a large price cut. It may be worth looking into. Hope you guys learned something from this video. Thank you for watching. Until next time.